Hey, welcome to another Technical Tuesday. My name's Karl Eggers, and let's jump right in here. We're going to cover two things today. We're going to cover interest rates, which may sound boring to you, but there are some trades that can be done with using interest rates either to your advantage or not. So we're going to look at a couple of trades, and then we're also going to look at gold today, and in conjunction with that, gold miners. So let's start with interest rates. This is a 10-year Treasury yields. And as you know, they're sitting here around 2.3%. We're doing this in the middle of the day on Tuesday. And so really after the election, you can see that we had this big move up in interest rates after the election. It was kind of pro-growth, risk on. And then interest rates started to kind of trickle down, trickle down, trickle down. And we were watching that. Well, as they broke out right here, you can see that we went ahead and went long basically TBT. So you can see the TBT trade, and what this is a double short of treasuries. So if you think interest rates are going up, you buy this particular exchange traded fund TBT. So you see we had all these running into this, running into that, and then once it broke out, we bought that. And so it's done pretty well for us. It's not a huge trade, but we believe it's rolling over. Now, if you looked at this picture, you wouldn't think that it tells you a bunch about rolling over. You would say, well, it doesn't look like it's rolling over very much to me. It looks like it still could be going higher. And it could, but let me show you the opposite of this, which is TLT. Now, TLT is just plain old treasury bonds. So again, if you think interest rates are coming down and bonds are going up, this is the one to own. And what we're seeing here is basically this kind of movement up. And what happened was, as this was moving down, we kind of benefited from that, because remember, we were actually owning TBT, which is benefiting from this particular ETF falling. But you can see the breakout. This red line is the 200-day moving average. So as we broke out above it, then we came back down and tested it, held pretty good, ran off of it, and it's bounced again. I think right now is a period where TLT might start working its way higher. So technically, let me clear some of this off here. Technically, I think if you look at TLT, you can see that picture. It just looks like it wants to move higher. Now, again, this isn't a big trade because interest rates aren't moving a tremendous amount. But you can kind of see what's happening here is that this thing started to bottom, and now it may be working its way higher. And of course, the highs are also working their way higher. So we're in this channel. We're in the bottom side of it. So having said that, again, I think the path of least resistance is that we could see TLT start to move up. So what we did was we exited TBT. Now, we didn't do the other side of the trade and go and buy TLT. You could do that. I don't feel as strongly about that given some fundamental reasons. But if you want to take this for a trade, I think you could certainly do that with a stop right underneath here. And remember, what would make TLT start to go up like this? Number one would be some type of big shock. North Korea actually does something towards the United States as opposed to just rhetoric, something like that. Number two could be that the economy just weakens. There are some calls that, hey, earnings are as good as it gets. They're going to start to roll over, and if they do, the economy is going to slow. And the other thing is, part of the reason why we're seeing interest rates start to move up, which means TLT was going down, was because of this talk of ending quantitative easing and reducing the Fed's balance sheet. And so that people thought that could lead to higher interest rates, and so they already did that. So maybe it's a buy the rumor, sell the news type of situation. So I think in the short run, especially with the stock market, that's the fourth reason the stock market overbought. We could see the stock market pull back. When you do, you tend to see people shift into bonds. So we could see this be a nice little trade here. And again, your stop would go somewhere right in here, maybe right below the 200-day moving average. So now we're going to move on to gold. And what you will see here is kind of a sloppy little channel here. But basically, you can see these lows here. And we kind of broke a little bit in July. And here we are back bouncing once again. So again, you kind of look at gold. This picture does look like gold wants to move higher. And again, given that the stock market is a little overbought and due for a pause, and due for the fact that this technically looks good, I can see gold continue to move. Now, we are long gold miners, junior gold miners, in our aggressive strategy. And by the way, that TBT trade we just covered, we locked in a small 3.5–4% profit, I think, on our aggressive strategy as well. So these are short-term trading ideas in our aggressive strategy. So if you take a look at gold, again, what you'll see is if you kind of look at the 200-day moving average, it's maybe bouncing off of there. I don't know if the moving averages are terribly relevant right now, and you can see why. They're not always relevant for every picture. And again, it crossed here, it crossed here, it crossed here. So how can you now say, well, let's use it here? But it did bounce off that. Obviously, some people are using it. I just like the fact that if you take a look at really this, it broke out. And we actually owned gold miners in this. We took profits, and some of this we talk about on Twitter and on our weekly podcast. We took profits. It worked out really well because then gold came right back down, and we re-entered it using the junior miners this time, which is a little more octane. And here's that picture of the junior miners. So, again, what you're going to get with the gold miners, and the gold miners, you're going to get more movement than the actual gold itself. The junior miners, you're supposed to get more movement than gold miners. So you kind of, if you want a lot of volatility, gold miners is the way to go. And then furthermore, junior miners is even more volatility, which can hurt you on the downside. But if you take a look at the junior miners, again, this is kind of what we're looking at here. We've been in this pattern. So not only did we kind of break out here, which was good, and again, for those of you that are new to kind of technical charts, we draw a lot of lines. So gold miners were moving down. They broke out right in here, broke out, came back down, and now we're look like we're bouncing off of this and heading back up again. So if the stock market weakens, you could see gold miners continue to run. So those are the two trades that we really like right now. And again, the interest rate one, not that big of a deal because we're not talking about huge moves. But again, every little bit helps, and taking profits on our TBT was a good move today. Junior miners, we remain long, and really those are the two things we wanted to cover here on Technical Tuesday. Just a reminder, eggerscapital.com. You can always go and go to that website. And don't forget to subscribe. If you like this YouTube video, subscribe to our YouTube channel, and we will put more charts up there, especially on Technical Tuesday. All right, guys, have a wonderful day.